Mike Tedeschi, Wealth Management Advisor at Perspective Wealth Planning with this week's market breakdown video. It's a holiday shortened trading week with us off on July 3rd in observance of the July 4th holiday. So don't forget that tomorrow on Friday. In this video, we're going to take a look at the four major U.S. indexes. We are also going to take a look at what some hedge funds are doing here. And we are also going to look at the fact that Wall Street has never been more confused than it is right now. And I'll get to that in just a bit. That's a pretty interesting piece, so stick around. What I wanted to also say for you guys here before we jump into this, if you like this content, please subscribe to the channel so that you can get this information on a weekly basis. Well, let's jump right into it here. First and foremost, let's take a look at the Nasdaq. The Nasdaq has been the clear leader this year. It's the only index that is green for the year. You'll notice this is where we started 2019, and here's where we are. We are up strong. If you look at the move that we've had since the bottom, it has been essentially straight up. And over the last month or so, we have made higher highs and higher lows. So we have an uptrend that is in place here on the Nasdaq. And in fact, today we're making another new all-time high in on the Nasdaq. We have seen clear leadership out of the technology space all year long. That doesn't seem to be slowing down here as it continues to push higher. People keep talking about this being bearish for some reason. Making new all-time highs is not bearish. Okay, when we look at the Nasdaq, it's been clear leadership and it's been straight up. So until that changes, even though the rest of the indexes don't look nearly as well, we have less of a concern for the other indexes as long as the Nasdaq still continues to push higher. Let's take a look at the S&P 500. Well, it is down for the year, right? We started the year here and we're slightly down a little bit over the year. We moved up pretty straight up for a few months, and then really over the last month and a half, and you'll see this out of the other indexes, the Russell and the Dow as well, we have stalled out. We have a potential island reversal pattern into resistance, and we have gone essentially nowhere in about a month and a half. But one of the ways that you can look at this from a bullish perspective is this is a bull flag. And it came from lower, and here we are with our bull flag pattern. Where it moves next is going to be really, really important. If we make a break to the upside here, I would expect those all-time highs to get tested. And if we lose the support zone down here, again, we've talked about it before, the next support's down kind of around that 2,700 level, right? But when price makes a really large move, there's two ways that essentially the market can deal with that, right? It can snap back in the opposite direction, kind of mean reverting is what they call it, or you can trade sideways for a while the market digests price. That could certainly be what is happening here with the indexes other than the Nasdaq. The market is digesting the moves that it has, and it's trading sideways, waiting for the next move, whether that be up or down. Our job is not necessarily to guess. Our job is to react to what happens. So while we're trading here in this range, we're just watching very closely for our break and our next clue for where the market may go. When we take a look in here at the Russell, right? Very similar. We've talked about this a number of times. It is still down for the year. It is the worst performer of the indexes. We'll open the year up here, and we're all the way back down here. The three important levels that we've been watching, and we've gone over it a bunch, is the 50s, 1550, 1450, and 1350, right? Those are those major levels that we've basically played out here over the last month or two. You'll notice where we are right now. We're right in the middle at that 1450 zone, right? A break above it gives us that 1550, and if we get rejected here, once again, we sort of see that 1350, but really we won't have a clear next move until we break over that 1550 or we break under that 1350. So those are the levels that we continue to watch very closely here. And the Dow Jones, very similar. To the S&P, down for the year. You can see down slightly more than the S&P 500 is for the year. Had a potential island reversal pattern, just like the S&P, right at that 2,700 level. But again, we came from down below, and we have traded like this here over the last month or so. So we could have that potential bull flag if it makes a break above it. And of course, if it breaks below, we're looking for those support levels down below. But really, same as everything else, we have not really gone anywhere here over the last month and a half. So our key to where our next move is going to be, really, we have to watch all of these indexes and pay attention to their price action and those key levels that we just laid out. What I wanted to first take a look at is how hedge funds are positioned here, and what they're doing is very odd, right? In 2019, when the market pulled back down, hedge funds aggressively bought the dip into here. right? And you can see that on this chart. And they held on for that rally up, all right? They did the same thing back in 2016 and 15 when we had these pullbacks. They aggressively bought into it and held for the move up. And once again, back in 2011. This chart goes back to 2011. What they have done this time is not only do they buy, they continue to add on the way up, which is very unusual and not something they've done before. Right? We continue to look at all these different data sets and go, there's a lot of things that aren't adding up, and we actually are seeing that when we take a look at the positions of people inside the market. They're very different than they've been in the past. There is definitely a lot of confusion on Wall Street, and the next thing we take a look at will show you exactly what I mean. What we're taking a look at here is Wall Street has never been more confused in June. The S&P 500 year-end price target for Wall Street strategists have never been more confused. Basically, they've been very slow to increase their year-end price targets for the S&P through June. Their current price target is tied for the lowest in 20 years, and there's an extremely wide variability among the price targets, showing a lot of confusion. Overall, they're not giving the S&P much room to rally over the next 6 months, which historically has tended to actually be a good sign in terms of price. We'll look at that data set now. When we take a look at this data set, we actually see that when they have the lowest year-end average price targets through June, going all the way back to 1999, 6 months later and a year later, the market was positive 100% of the time and extremely high win rates all across the board. Now, if we look at this data set in the opposite way, when the market is predicting the highest year-end prices on average, it's very different. We can see going out to 6 months later, it's only positive 46% of the time, and a year later, it's only positive 62% of the time. Right? This is sentiment really well charted for us, guys. When the market is not expecting much more upside, i.e. sentiment is essentially pessimistic, markets tend to continue to rise. And when market is overly optimistic in terms of price, well, markets tend to fail, right? We kind of get those turning points when we have those extremes, which is the reason why we take a very close look at it. So what we have here kind of as a summary is the market is very, very confused as to what is going to come into the end of the year. We have a lot of large things kind of still looming out there. We have the presidential elections, which is going to be a huge impact for the overall market. And of course, we have the ongoing continued concerns with the coronavirus. So going into the second half of the year, there is a lot of concern. And at the same time, there's a lot of support from central banks. So you have a lot of different ways of looking at what can happen here over the next few quarters. And what we're going to continue to do in these videos, we'll take a look at these data sets, but really we are going to pay very close attention to what price is telling us. All right. And as we are looking at it right now, the summary of today's video, for the last month and a half, we've traded in a range. This range could either be bullish or bearish. We have to see which way it breaks out. So we're going to continue to pay very close attention to that for you guys. As always, if you guys like the content and you want to subscribe to the channel, fantastic. But you could also reach out directly to me and have a conversation as well if you like. You can reach me at mtedeschi at Perspective Wealth Planning, or you can pick up the phone and give me a call at 814-580-9881. Would love to talk to you about the markets or anything related to the markets. I hope you guys have a safe and happy 4th of July holiday. We'll be back next week.